everybody, what's good? This is your boy the Gold, and the lesson of today is gonna be like how to spot market patterns or market structures. How do I spot my structures, and how are my analysis so simple, and how do I make the charts look so easy? But nonetheless, guys, let's go.
All right, everybody. So we're gonna actually deal on how is so simple to identify patterns. You know, a lot of people, the problem that they officially face or mostly face is that they focus on patterns and make them, or kind of like make them fixed to be that they can't change. I don't know if I'm making sense. They can't be changed. So when it comes to market structures and market patterns, you need to be very open with how the market is actually moving, by actually opening up to evolving, opening up to changing your setups, and opening up to actually looking at the market in a different way. So if you can look probably from here to here, we can see the touch, and then from here to here as well, from here to here as well, we can actually see that, okay, the dollar index is actually forming a contraction channel, right? Since the dollar index is forming a contraction channel, as we delve deeper to a 4-hour chart, we actually spot that the market had actually a bearish type of channel over here, and a bearish type of channel over here, yeah, which makes sense if it's here. So after this bearish type of channel, we must look at the market in a different way as well. As the market finally broke out and started playing over here, then how to spot another pattern, you need to be able to evolve. So we have moved out of this structure. Now we're looking forward for the next structure. What does the next structure look like? This was the next structure. This was the next structure. So as we can see, from here the market dropped and it finally broke out over here, and then came back to respect this area over here, and then went out, gave us a clear correction for continuations to the upside. That's why the market actually gave us this over here. It's a correction phase to confirm that our analysis were doing better. So what I'm trying to show you guys is the importance of evolving, and the importance of actually making sure that you don't have a fixed mindset towards your analysis. Be open to changing, you understand? And also remember that the market moves in different structures and different patterns, but the one thing you always got to remember is nothing changes the market. What you've seen before, it will happen in the next few times. It might not be tomorrow, it might not be in the next month, it might not be in a year, but definitely it's something that's going to happen again in the future. So looking at what's the current market doing right now, we're actually seeing that at this level the market had to change from this side. As you can see, this was the touch over here, there was a touch over here, and now there was a touch over here, and then the market is now dropping. So you want to see what's the movement does the market try to create right there. Will it come back for a double top type formation before it drops, or will it come to respect this area before it drops, or either it will break out this structure, give us a clear correction for us to continue to the upside. So that's how it is. So let me show you how, guys, I actually evolved from taking a trade of gold or XAU USD.
All right, guys, so making an example, I'm gonna make an example with gold. So this is what the actual trade that I took, I think 2 days ago. So if you go to a 4-hour chart, you can actually see what I mean by saying identifying market structures. So the first structure we identified was the current one that's here. If you can look at it, this was the previous touch at this current level, and then we dropped till here, and then we broke out over here. So for me, it was the first, second touch, and then the third touch was a breakout. And then if you can actually zoom it in on an hourly chart, you're gonna actually spot that it was also a structure over this area that built up as a bullish type momentum. Reason why when it reached this bottom, it actually bought. Yeah. So as well as over here, you can see it was a structure which is a falling wedge, which is a falling wedge from an impulse up, falling wedge, continuation to the upside. So it's actually quite simple to spot how market structures work. Actually, if you can just build from 2 touches, remember, the more the touches, the sensitive the area is, but the less touches, the more probability that the market structure might be breaking, or it might be simple to actually break above. So it's the same thing. As you can see, guys, this is the real account for my broker that I use, and then we're currently running in such kind of profits. So nonetheless, FS Coach your mentor signing out.
All right, so as you can all see, guys, that actually at the current moment we have gold. So what happened to gold? Gold pushed to the upside, right? When it pushed to the upside, it was creating a bullish type channel, right? And then it moved from pushing to the upside and started now pushing to the downside, of which the breakout was also quite good. As you can look at it, this was the breakout, and then this was a correction, and then it continued. But what you always gotta be careful about, always look left, guys. As I'm always saying on my videos, that look left. Left is actually a place that's going to be able to make you spot the sensitive areas and all that and all of those, right? So now as we look over here at this current level where the market is right now, right? So we'll actually understand when we drop it to a 1 hour time frame. As we drop it to a 1 hour time frame, you can actually spot what the market is trying to do right here. And then what we saw, it was okay, if the market is doing this at the current level, and then probably here below we also see something in this nature. This means the market is creating a descending type of structure. But if you zoom it in, you would actually see that even within that descending type of structure, there's also a rising wedge inside right there, of which we know it's an impulse down, this is a correction, and then it's going to fall down again. But now we have this area which is possibly sensitive right now, right? So let's replay on the market. Let's see what happens. The market kept on pushing. As you can see, it finally dropped, it played around, no clear indication of what's happening. Now we evolve this structure to here. Now how do we see it? We see it as a third touch, right? So this was the first touch, second, this is the third touch. As you can see, guys, that it gave us a contraction channel. I remember after it impulsed to this point, that's when we actually closed, because the market quite didn't play as we expected. After then, you see, started coming back, it didn't have clear identifications and all of that. So that's when we closed. So let me use actually a different way of how to teach you guys how to evolve with the market instead of having fixed analysis. So as you can also see from here, now we finally broke out of this structure. And then if you can look at this, now we are here. So the market actually broke out and it's impulsing to the upside right now, right? It's impulsing to the upside. So what do you do? 1 hour time frame, and then you can actually see what's happening over here. It finally broke out, but now we don't want to have a fixed mindset because it might mess up how we see the markets. So I would also evolve my analysis to see if this is a possibility, structure, of which it actually is. Because if you can look at it, if the market can actually respect this zone, we might see USDs are going down, right? This is me trying to show you guys how you need to be when you actually analyzing on the market. Don't just say maybe this is a continuation bullish flag and then you just want to buy. Look at the possibilities. Why might the market sell? So let's go to USD CAD. As we go to USD CAD as well, you would also see, let me just erase all the analysis. You can also see that, okay, possibly this was a structure to like an uprising zone, and then we had something in the nature of a falling wedge over here, which is a reversal pattern. And then now the market is moving in this nature, and when we look left, we can actually see that this area over here, it's one area that is a bit sensitive, because the market touched here and also respected here, and now it's playing around right there. So now as we zoom it in, what do we actually see? As we zoom it in, we actually see that, okay, this is what's happening as well. as this. So it might be a breakout above. The market might be continuing actually to go to the upside from here. The market might be continuing to the upside because why? We're not having a fixed mindset with this analysis. Imagine now if this was a fixed mindset, but we don't look at what's currently happening over here. So that's what confirmed our analysis. Then we possibly going to look forward to having it up until right there, holding it up until right there, to see what's the possibility that might happen. So that's the greatness of evolving with the markets, guys. Let's look at the last pair, USDJPY. As we look at USDJPY, we remove all the analysis, go to the 4-hour chart, you would actually see that we're moving in a bullish channel, right? We're moving in a bullish channel, and then we want to possibly see the structure that it's building, and you can see within there is a lot of trickling movement. The movements that are not quite clear how they are actually moving. It's just a rough sketch possibly. There's no impulse, nice impulses or either nice corrections. Just the market moving in a trickish way. So yeah, we will go to a 1-hour time frame. So as I go to a 1-hour time frame, you can possibly see as well that in the current state, this is possibly, it looks like a continuation bullish channel over here. It looks like a continuation bullish channel. So we would see if the market actually breaks up to actually continue and respect that channel at the bottom, or either this might be our sensitive area where the market will actually push to here and then play around before it actually drops again. Possibly we will reach and have some kind of structure here before the drop. So that's the being open towards seeing the differences in the market. The greatness of it, guys, is that it will help you to see both how sells will appear on a pair and how the buys will appear. So in this instance, buys will appear if the market pushes to the upside and give us a correction from this point, and then we continue to the upside. Or if the market gives us maybe a kind of channel, correction channel that rises up from here and then until the drop. So what's the actual lookalike for it? So if the market pushes, as you can see, the market looks in this nature. It pushed to the downside and now it's here. If the market pushes like this, we would know that now this is a correction phase. This means we need to continue down, right? But if it doesn't happen like this, the market would actually impulse down and then start playing without giving a correction and break above. The minute it breaks above, it already break above the zone and actual resistance we had, and turning it into a what? And turning it into a support. Let me just scratch it out, and then we're gonna face the upside movement.
And remember, in Forex we're talking about, we came in this game for money. We came in this game to earn a living. So we are not here to play games.